Matrix and welcome to Matrix. My name is Looney and today we're doing your final exam prep for accounting. All you need to do to get your questions and comments through to us is follow Matrix on all our social media platforms as well as our WhatsApp line, and the details are on the screen. We also have a cool competition going on for you guys, so please stay tuned to get all those details later on in the show. I've got Nicolene, our awesome sign language interpreter, as well as Ashraf, our teacher. Thank you so much, guys, and over to you.
Thank you, Looney. Welcome, grade 12s. Yes, you're with Ashraf Patel, and when you hear Ashraf Patel, you hear accounting. That's right, guys. We're busy preparing for the exams. We want to make sure that when you walk into that exam room, you're going to ace that paper. So, let's look at what we have in store today. Today we're looking at, firstly, share capital. Let's get back to our slide and pick up our pen. Today we're looking at share capital, right? Obviously, you'll notice that share capital could feature as part of the balance sheet or as part of the cash flow. So there's various places where you can get a question based on share capital. Then we're going to look at stock control. Right? Again, remember, stock control could appear in paper 1 and it could also appear in paper 2. Then we're going to look at our audit reports. We're also going to focus on corporate governance. And then finally, we're going to look at the calculation for taxation paid. Okay, so I've given you an overview of what you can expect in today's lesson. Let's move on and see this idea of share capital. Now, the most important thing about share capital is for you to look at the information, see what is given to you, and based on what you have, you then answer the question that is required. Once again, examination tip, when you are working through your reading time, remember you are given 10 minutes of reading time before the official commencement of the exams. During that time, peruse your answer book, because it will give you a clear indication of what is expected in that paper, right? So, important examination tip for accounting. Let's see, what are we told? We are told that authorized shares consist of 3 million shares. Now remember, authorized is the maximum number of shares that this company can issue. Got it? The maximum that they're allowed to issue. What has been issued? Let's check. On the 1st of September 2019, there were 1,800,000 shares in issue. In other words, of the 3 million shares, we've issued how many? 1,800,000 shares. Okay? Then, they're telling you on the 1st of July 2020, the company repurchased 120,000 shares at 7.20 Rand each. Important. Watch when you are reading how to extract the information that you need. Then, and this was 20% above the average share price. Now, this is important. When we're dealing with shares, you're going to look at the average price and you're going to look at the repurchase price. Now remember, in your share capital, you always work with the average price. The price above the average price is going to go to your retained income note. I repeat, your average price will go to your share capital note, and your price above the average price will go to your retained income note. Please, that is very, very important. Then you are also told that these shares that were repurchased do not qualify for final dividends. We'll talk about that just now. Okay, so now, in terms of my calculation, I'm told that 20% of the unissued shares were issued on the 1st of September, and the issue price was 6.60 Rand. Now, what is that? The new shares that we are now selling, right? And how many did we sell? We sold 20% of the unissued shares. Taking you back, authorized was 3 million. Issued at that point was 1,800,000. So obviously you can see the number of unissued shares at this point is 1,200,000. From where? 3 million minus 1,800,000. Okay? Then you're also told that a final dividend of 22 cents per share was declared, right, on the 31st of August 2020. Got it? Okay. Now you'll notice that in this question, you are not given the opening balance of your shares. You have the number of shares. Okay, so this is what I want you to do now. Let us take a look at the information and let's try and figure out how we're going to go about answering this question. Firstly, you are told that you sold for 7 rand and 20 cents. Okay, remember, sorry, not sold, the shares that were repurchased, right? The shares that were repurchased at 7 rand and 20 cents, and this was 20% above the average price. Okay, so if that's the case, let's just do this quickly and start again on this side so it'll make it easier in terms of my work. So I know that 7 rand and 20 cents is equal to 120%. Why am I saying that? Because I'm told that that price was 20% above the average price. Remember, with share capital, you want the average price. You've got the total price. You need the average price. Therefore, the average price obviously would be 100, and that would be my unknown. Okay, let's calculate that. And we say 7.2 times 100. Okay, and obviously you can see what I'm doing. I'm cross multiplying. So it's your 7.2 times the 100. Okay, and let's get back to the slide there. There's it. Here goes. So we got the 7.2 times the 100 and divide that by 120. And that will give me an average price of 6 rand. Okay, what have I done? I've managed to calculate my average price, the figure that I'm looking for. Once again, a recap on the calculation. 7 rand 20 was the price, the rand value of 20% above the average price. Therefore, I added the 20 to my 100 to give me 120. So clearly you can see 7 rand 20 percentage 120%. Why? 20% above the average. Then I said, okay, my unknown, which is my average price, in percentages is equal to 100. Cross multiply, and I get my average price now to be 6 rand. Voila, I'm on the road to answering my question. Okay, now that I have that, watch how I complete my information now. So here's my authorized share capital. We've discussed that. That was the 3 million. Right? Remember, the authorized share capital doesn't have a value attached to it. It's just the number of shares that the company is allowed to issue. Here we go. At the beginning of my financial period, I was told the information was 1,800,000 shares. There we go. Now, can you see? I can use the 6 rand as my average price in order to determine 1,800,000 times your 6 rand will give you your rand value of 10,800,000. Now this information was not provided to you. You had to calculate the average price in order to determine that opening balance. Now, what's a golden rule regarding the repurchase? If you do not sell any further shares, your average price does not change. In other words, the moment you sell more shares, immediately upon selling the new shares, your average price will change. So you can clearly see that at the beginning you had 1,800,000 shares. No further shares were issued at that time. So the repurchase will be at the average price. Please remember that. Okay. Now we come to the repurchase. We repurchased 120,000. Notice in brackets, because obviously you're subtracting. In accounting, the use of the bracket indicates we are subtracting the amount. Okay? How much were these shares repurchased at? watch guys, important. In share capital, you work with the average price. Very, very, very important. I can't overemphasize this. In share capital, you work with the average price. Right. You must be thinking I'm nagging. Yes, I am. Because I don't want you to make a mistake in the paper. Okay, so here goes. There's my 6 Rand. Obviously, 120,000 times your 6 Rand will give you the repurchase price of 720,000 Rand in terms of my Rand value. Okay. What was I told further? If you remember the question, let's just go and refresh our memories here. We were told that we issued 20% of the unissued shares were issued at 6 Rand and 60 cents. Now 20% of what figure? Once again, let's look at this here. Remember we said we had 3 million shares, which was my authorized, of which I had sold already 1,800,000. Okay, that left me with a figure of 1,200,000. Those were your unissued shares at that point. Now what did we do? We sold 20% of these shares. Which ones? The 1,200,000. Therefore, 20% of 1,200,000 will give you your 240,000, which is the new shares that we are selling. There we go, 240,000 shares. And obviously the price was given to you. You were told that these shares were issued at 6 Rand and 60 cents per share. Do the multiplication, 240,000 times 6 Rand 60, and this will give you your Rand value of 1,584,000. Okay? On track. Are we all on the same page? Same line, same word. Great stuff. Okay, now watch the calculations, important. You had 1,800,000 shares. You repurchased 120,000 shares. You sold a further 240,000 shares. So if you do this calculation, you end off with 1,920,000 shares in issue at the end of your financial period. Now, do the maths here, obviously using your calculators. 10,800,000 minus 720,000. Bracket means you subtract. Plus 1,584,000 will give me my closing share capital value of 11,664,000. Now guys, what is very, very important is to look at the information that is provided. So I'm taking you now out of this question to give you hints as what to look for when you are working with share capital. Number one, if a share capital balance is given to you, ascertain whether it is my opening balance or whether it is my closing balance. Got that? Because obviously that's going to impact on your calculation. Number two, I've said this early on and I'm saying it again. Your average price of your shares will only change if you sell more shares. If there's no further sales of shares, then obviously it means that the average will not change. Okay? Number three, depending on which balance is given to you, opening or closing, you may have to work from the top to the bottom, or if you got the closing balance, you may have to work from the bottom to the top. Remember, when you're working top to bottom, it's the normal operation, whereas when you're working from bottom to top, it's a reverse operation. Meaning, 11,664, in this case here, you can clearly see it's 10,800,000 minus 720,000 plus 1,584,000. But obviously, you'll change your operation depending on whether you're working top to bottom or bottom to top. Clear? Right. What else do we know about this year? We are also told in the question that a final dividend of 22 cents per share was declared on the 31st of August 2020, right? And the reason I put this here is to make you aware of the calculation of the dividend. Right. Now, because the question specifically mentioned that the shares that were repurchased, these, did not qualify for the final dividend. In other words, which shares here will qualify for the final dividend? The 1,920,000, because you've already removed the 120,000 shares because they did not qualify for a dividend. However, if the question had said that these shares do qualify for the final dividend, then obviously you cannot use the 1,920,000. Obviously, it will be the 1,920,000 plus the 120,000 shares, because these shares that were bought back qualified for the dividend. So important, RTFQ. Make sure you read the full question, so you know exactly whether the shares that were repurchased, whether they qualify for the dividend or whether they don't qualify for the dividend. Important information. Okay guys, we've been through a very important note. Make sure you master it. We're going to take a quick break and we'll see you in a while. Over to you, Ludi.
Thank you, Ashraf. Matrix, let's take a quick break and we'll see you shortly after this. We're back from the break, guys, and I hope you're still enjoying the show. If you've just joined us, we are still doing your final exam prep to help you with the upcoming exams. Wazometric is bringing you the hashtag WazoWinner competition, so if you want to win yourself something, listen up. We're giving away 2 gigs of data to 2 lucky matriculants. So all you need to do to enter is head on over to our Facebook page and all of those details will be there. Thank you so much, Ashraf, and over to you.
Thank you, Luni. Welcome back, Accounting Boffins. Let's look at what we've done. We've dealt with share capital. We're now moving on to stock control. Okay, now remember, with stock control, there are various methods of stock validation. Just to recap, you get stock systems, which is your perpetual and your periodic, and then you get stock validation, which is your specific identification, FIFO, weighted average. Okay, let's look at the information that we have here. We are told that we had bought stock. Okay, let's go to the previous slide. They're telling you here, closing stock is made up of 1,260 units. Okay, so they're giving you the number of units. They're not giving you the value of the units, and that's what we need to calculate. Okay, they're telling you that you have 2 batches of stock which were purchased during the year, right? So you bought stock in 2 batches, and they are telling you there were no missing items, so no stock item has been stolen or no stock item has been returned. In this particular question, there's no return, but be careful. Look for that question. If there was a return with a particular batch, keep that in mind. Right, now, in terms of my information, what do I know? I've got opening stock, and there's the value of my opening stock, the number of units, the cost price per unit, and obviously the rand value. Okay? Remember, what are we doing? We want to calculate the value of 1,260 units. Okay? Clearly you can see here, in terms of my information, let's just go back here and just get that information. What's the stock validation method? How are we valuing our stock? What's the method of valuation? The stock is valued at first in, first out, right? Whether you say FIFO, FIFO, whatever it is. First in, first out. Okay, going back to my table. What's the secret for FIFO? At this stage, you should be shouting out this answer. Bottom up. I repeat, FIFO, the secret is bottom up. What do I mean by that? Let's look at it. You come to the batch that you bought last. So in that batch, you had 1,200 items that you had purchased. So obviously, all of those items are left over. Why? Because we worked on the principle of first in, first out. Clearly telling you that the stock that came in first is the stock that is sold first. Therefore, you go to the bottom of your table, you look at the stock that was purchased last, right? There we have it. How many items were purchased? 1,200 items were purchased in the last batch. The value of those was 1,950 in terms of per unit value, and the total rand value was 2,340,000. Therefore, when you're doing your calculation, here goes 1,200 units, number of units. The cost price per unit was 1,950, and the rand value of those units was 2,340,000. Now watch, people. Examination tip. Do you go and do a calculation for that one there? Certainly not. Why? It's given to you. All that information is given. You're extracting the information and doing your calculation. Don't take out your calculator to try and calculate this. You're wasting time. Remember, you're writing against the clock. The clock is ticking. And therefore, you have to ensure that as quickly as possible, get the correct answer. So there we go. We've got our figure, which is 2,340,000, based on the 1,200 units of stock. But remember, we have to account for 1,260 units. In other words, we've already taken these into account. We've sorted out the 1,200 units. Clear? So now what do? Look at my table once again. Bottom up, you go from there to the next item. Here, you're stopping at batch number 1 now. And how many units of batch number 1 do we have left over? Our total stock count was 1,260. I've accounted for 1,200 units. Obviously, if you do the maths, 1,260 minus the 1,200 will tell you account for 60 units. Therefore, you can clearly see now, my second part of my calculation, I'm accounting for the 60 units. Why? I need a total year of 1,260 because that's the number of units that I got left over at the end of my financial year. Right? And what do I want? I want the value of the 1,260 units. Got it, guys? Good. So now I work with the 60 units. And can you see? I bought 1,800 units. That's correct. But of those 1,800, I've only sold 6, let's rather put it the other way. I bought 1,800 units. Of those, 60 units are left over. And where do I get my 60 from? 1,260 minus the 1,200 which I've accounted for. So 60 units of these of batch number 1 are left over, right? So therefore, there's my 60 units. The unit price of those units were 1,750. Now clearly you can see you can't use that figure because you're not working with 1,800 units. You're only working with 60 units. Therefore, now you take out your calculator and you say 60 times 1,750 will give you a rand value of 105,000. Clear? I now add my 2 rand values to give me my closing stock figure valued at 2,445,000. So this is using the FIFO method of stock validation or stock valuation. I hope it's crystal clear. Okay, so we've done the share capital, we've done our stock control. We now move on to the next one, which is audit reports. Audit reports are reports that are written by the appointed auditors of the company, right? We are given an extract from the audit report. It says to shareholders, so obviously it's addressed to the shareholders. Why? Because auditors are appointed by shareholders. To do what? To express an opinion on the financial statements of the company. Watch the use of the language. to express an opinion based on the evidence in front of them. Okay, so they are saying now, we have audited the financial statements set out on pages 12 to 30, right? They are specifying that they have audited, yes, but they've audited only pages 12 to 30. Important information, as you will see when we look at the questions that we have to answer. What was their opinion? The opinion is, we have not been able to obtain sufficient audit evidence on significant matters identified and described in the paragraph basis for opinion. As such, we are unable to express an opinion on the reliability of the financial statements. So what are the auditors saying? They are saying we are unable to express an opinion, right? Keep that in mind. The question says, where, why, and when is this audit report expected to be presented? Okay? So you have to answer this question. Now this is your examination question. Let's look at it. This audit report will be presented at the, you must have heard the word before, AGM. It stands for Annual General Meeting. There the abbreviation is the AGM, right? On the and this is given to the shareholders at the Annual General Meeting, right? It's also given on the publication, because remember, where you have public companies, they have to publish their financial statements. So part of the financial statements, whether it appears in a magazine, newspaper, internet, wherever it may appear, you will find the auditor's report there. Okay. The next one is, why? And the answer is, obviously, the shareholders are not running the company. They are not present in the operations of the company. So obviously, they have to know if they have invested in a particular company. To protect their investment, you're going to have auditors that are appointed, right? And they are independent auditors. They are external auditors. And once again, I repeat, they are appointed to express an opinion on the financial statements of a company. So they will inform the shareholders, right? Who else? Obviously, your potential investors. About what? About the performance of the company. Also, they will talk about the progress of the company. So all of this information would be present in your audit report. Okay. Remember, as public companies, we have to be compliant with the Companies Act, and you have to be compliant with IFRS. You've heard of IFRS, haven't you? Definitely you have. International Financial Reporting Standards. All companies have to comply with IFRS. Okay? And obviously to show transparency. Very, very important. At this point, I'd just like to take you away from this question for a while. Because remember, a company also appoints internal auditors. Now, your internal auditor is appointed by the company to report on what? Internal control measures within the company. And obviously, who do they report to? They report to the management of the company. Remember, when we're dealing with companies, the company is owned by shareholders, but is managed by your directors. So clearly you can see that in order for the shareholders to feel safe and protected, and very necessary in any country, for potential investors or to increase investment in a country, we need to protect the shareholders. And if that is done, this will boost investment and growth, and it has far-reaching impacts on the economy of our country. So obviously, this is done, and that is why we say accounting is a life skill. And all of this impacts on our lives. Okay, a company's financial statements need to be published. Remember, it's a public company. So obviously, these financial statements have to be published. Okay? Auditors are appointed by shareholders, right? And who are they answerable to? Obviously, they are answerable to the shareholders. Got it? Move on. Next question. The question says, when? When will this happen? Obviously, at the end of your financial period. That means when you finally drew up your financial statements, whenever your year end may be, or upon the completion of the independent audit, depending on the audit date, whatever the company has set at its audit date. So keep that in mind. That's all to do with your audit reports. And while we're on audit reports, let's just go through the three types of audit reports. You have your qualified, your unqualified, and your disclaimer. Right? Disclaimer, which is this particular one that we're dealing with, which is also called a withheld report, meaning that the auditors are not prepared to express an opinion because of insufficient evidence, and therefore they do not express an opinion. Then you get your qualified. Now don't get confused here between qualified and unqualified. It has nothing to do with the qualifications of any auditor, right? Because very often we find this. It has to deal with the audit report. If it's a qualified audit report, it means they've accepted it. However, the following items need attention. So that's what we mean by a qualified audit report. And then finally, you get an unqualified, also referred to as an unmodified. That means there's no changes necessary. Based on the evidence, they are happy and the company is then compliant with the Companies Act and with IFRS. So those are your three types of audit reports. Okay. Remember you said earlier on they specified pages. Why would they refer to pages in the audit report? Auditors are not expected to check every transaction. It's not possible. So what do? It's called the scope of the audit. So they were expected to audit those pages, and also limitation of their responsibilities. In other words, they're only responsible for pages 12 to 30. They're not responsible for anything outside the scope of that audit. So obviously those are your two reasons. It talks about the scope of the audit and limitation of their responsibilities. And the last question we have here, what impact will this report have? If the company receives a disclaimer, a withheld report, obviously your shareholders are going to be very concerned. They may want to sell their shares. The share prices will drop on the stock market. Remember, we talk about OMO, not the washing powder, open market operations, where share prices are determined by the forces of demand and supply. Then we're talking about potential investors would not want to buy because obviously this company is not compliant. And as a result of that, they've received a disclaimer or a withheld audit report. Make sure you know your audit reports. Let's take a quick break and see you in a jiffy.
Thanks, Ashraf. Matrix, we are going to take a quick break, so please don't go anywhere. We'll see you shortly after this. Welcome back from the break, Matrix. I hope you guys are still enjoying the show. We're in the final stretch, so over to you, Ashraf.
Thank you, Luni. Right, guys, what have we done so far? We've done the share capital, we've done stock control, we've done audit reports. Now we're looking at corporate governance. And I thought for corporate governance, I'll just give you maybe an appetizer, a matching column. But remember, it's important to know your corporate governance. So obviously, the first one is the King Code, right? And clearly you can see that this deals with, what does it deal with? This sets out the ethical and effective leadership expected of companies. The King Code deals with how companies are expected to operate in an ethical way, right? The next one is your triple bottom line principle, right? You've seen it, you may have seen it in past papers as well. What does it deal with? It talks about the impact of business activities on the profit. Not only profit, but it also focuses on environment and social issues. So therefore, triple bottom line principle. Your director's report, what will that tell us? It will tell us about the performance of the company and what major decisions were taken. Because remember, the director's report also forms part of your audited financial statements. And then obviously the final one will be your remunerations committee. And obviously what will they review? They will review and monitor the fee policies to ensure that they are fair. So an appetizer, make sure you know your theory here. It's important because you just go through it and then you move on to the next question. Right. So, done and dusted. The last one we're dealing with is taxation paid. Okay, now this obviously would form part of your cash flow statement where you are expected to calculate your taxation paid. Now, when we move on to this particular question here, my first question to you is, what type of an account is SARS income tax? And what's your response? Your response should be, it depends. It depends on what? It depends on the balance in that account. Clearly, people, if I tell you we have motor vehicles valued at 100,000, that's an asset, debit side. But when it comes to SARS income tax, your answer should be, it depends. And let me explain to you what I mean by it depends. Look at your SARS income tax. Right? In the first one, or in 2019, you find that SARS income tax, so let me identify 2019 for you. There's your SARS income tax. You can clearly see that in 2019, your SARS income tax had a debit balance. So obviously, it's appearing under trade and other receivables, meaning it's an asset. But is it always like that? No. Let me illustrate. You will find that when you look at the next year, the year under review, 2020, you also find that, look at this one here now, look at the difference in the placement of SARS income tax. SARS income tax is the item we are identifying, but it's appearing under trade and other payables, meaning that it's a liability. Does this answer my initial question? What type of an account is SARS income tax? For balance sheet purposes as well, please make sure that you place it correctly. If it ends off with a debit balance, it appears under trade and other receivables. It's a debtor. SARS owes us, we've overpaid the amount. Or if it ends off with a credit balance, then it appears under trade and other payables. Reason, it's a liability. We still owe SARS an amount of money that's due to them. Okay, so please be wary, have your wits about you when you're looking at the SARS income tax. It will always either appear under receivables, debit balance, payables, credit balance. Okay, let's go into our question that we have in front of us here. 1. So beginning of the year we said SARS income tax appeared as a debit balance of 69,300. Therefore, look at my calculation. Now when you are doing this calculation in the exams, you have two options. It's a calculation. How you present it is entirely your choice. As long as you come up with the correct answer, that's important. So I'm going to show you both methods. Let's start with the T account method. Now here again, you don't have to take a ruler and a pencil and draw a T account that's 90-degree angle. No, it's a rough calculation, people. clock is ticking. You're fighting for time. So, and even you don't have to label the account as SARS, like I've done here, SARS income. No, you just put there S in IT because you know exactly what you're talking about. And the idea behind this is you're determining the amount of taxation paid. Right, so there goes. Debit side, opening balance, 69,300. Step number 1, opening balance. Put it on the side where you find it. It's under receivables, therefore a debit balance of 69,300. Step number 2, my closing balance. Where will I find my closing balance for SARS income tax? I go and look in my information and I find it appears under trade and other payables, meaning it has a credit balance of 19,800 at the end of the financial year. Watch this here very carefully. In your T account, right? Obviously you've got your train line totals here, right? So if it's a credit balance, above the line it's on the debit side, because this is going to be brought down into this account on the credit side, 19,800. So your closing balance, before it appears on the credit side, because of balancing of a ledger account, and I'm sure you're okay with that, it has to first appear on the debit side. So there we go. There's my closing balance at the end of the financial year. So, recap, opening balance, put it on the side where it appears, either debit or credit. In this case here, debit balance. Step number 2, your closing balance. Identify receivable or payable. In this case here, a payable, but we first put it on the debit side to be brought down on the credit side. Got it? It's your balance brought down, carry down story. Okay, step number 3. You're now going to look for your taxation paid. That means go to your income statement, find the amount of taxation for the year. My income tax for the year was 420,000. Clearly you can see in your account, obviously your contra entry will always be debit income tax, credit SARS income tax. That entry will never ever change. It's a constant. Debit income tax, credit SARS income tax. So that was your tax liability for the year, right? Now look at my calculation. You start off with the 420,000. On the opposite side means you're subtracting in accounting, minus 69,300, minus 19,800, and voila, I've got my bank figure. How much taxation have I paid? I've paid a value of 330,900. Got it? Okay. If we look at the same calculation, now remember, oh yes, that reminds me, I'm appealing to you to show your calculations, because obviously in accounting you got part marks awarded for calculations. So this T account is a calculation. This calculation that you see here would form part of your calculation. Remember, the final answer is 330,900. That's your bank figure. That's the amount of taxation that has been paid. Because remember, for cash flow purposes, what do we want? We want the bank figure, the amount of money that left our bank account. And remember, it's an outflow of cash. Got it? Now let's look at the vertical method. You start off with your balance at the beginning of the year, 69,300. And the reason it's in a bracket, it means that SARS were owing you that money. You don't have to pay them that amount. So therefore, it's in a bracket. Then you bring in your income tax for the year, which is your 420,000. It's the same information, just a different method of presentation. The choice is yours. My preferred method is the T account, because you can't go wrong, because you know your accounting principles, right? Then you get your balance at the end of the year, which is 19,800, okay? And therefore, your bank figure amounts to 330,900. Now, I want you to notice something here. Watch. 420,000, you see it? Minus 69,300, can you see the bracket? Minus 69,300, minus 19,800, can you see the bracket? Now please, when you're doing the vertical method, make sure that your brackets are placed correctly. Otherwise, you're going to mess up the calculation. And you don't want to do that, right? You want to get full marks for all your calculations. In fact, you should be aiming for 100% in accounting. Definitely, you can do it. You've got to believe in yourself, and definitely you can achieve it. And then finally, you got your bank figure of 330,900. So what have we determined in this calculation? We've looked at how do we calculate our taxation paid. Okay. What have we done? In today's lesson, we've done the share capital, we've done stock control, we've done audit reports, we had an appetizer on corporate governance, and finally, we concluded with the taxation paid. Guys, practice, practice, and practice. Just a tip for you. Please make sure. I know that the accounting is being written whenever it is being written, but make sure you are well prepared before that. So do lots of preparation. Practice makes perfect. Read the instructions carefully. You can't miss that one because we know RTFQ. Read the full question. And then manage your time. You are given a time grid on your question paper, giving you a suggested time allocation. Make sure you stick by that time allocation. And definitely, from me, Ashraf and the team, we know you're going to keep your feet on the ground and you're going to reach for the stars. And you're definitely going to get an A in your accounting paper. Ludi, all yours.
Thanks, Ashraf. Matrix, we're wishing you everything of the best for your exams. Please use our study resources to help you prepare. Congratulations to all of our competition winners who will be announced on Facebook after the show. Don't forget to check out our schedule on www.wazamatrix.co.za, and if you missed any of the lessons, they are available on our YouTube channel. From me, Luni, Nicolene, and Ashraf, thank you and goodbye.